Hello, I'm Natalie MacDonald, and you're joining us at FundForum Asia 2016. Joining me now to discuss millennials and investing is Stephen Seow, Head of Wealth Management Asia for Mercer. Stephen, welcome. Thank you very much for joining us today.
Thank you. Thanks for inviting me.
No problem at all. Now, the first thing I wanted to discuss, what are millennials? How do we categorize millennials?
Millennials generally is defined by the age, and if you go by various websites, they generally term it as people born between 1980 to 2000. So roughly that translates into people just starting to work after graduation from the university to people that's roughly around 35 years old.
But I understand we can also, in terms of an investment viewpoint, narrow that down somewhat more into those different categories of millennials. How do you approach that?
Yeah, absolutely. So millennials between the age of 20 and 35, now there are some common denominators among them, like the use of technology, but clearly the way they invest, it's very different. So I generally categorize millennials into three segments. The first segment is the bottom part of the wealth pyramid that you normally see, the retail market. These are millennials that just start getting into the workforce. They just graduated, right? So they put something between 0 to 50,000 in the bank. The second categories are what we call the mass affluent. These are the millennials probably in the late 20s, the early 30s. They could be the investment bankers, the lawyers, the doctors. They have made some money for themselves and they qualify for what we generally call priority banking. So that would be the Citigold or the Standard Chartered priority banking of the world. So that's the median segment, the mass affluent. The third category are the millennials from the rich families. So from the family office, that usually are families above 50 million and above. So when we approach millennials, depending on where we are from, which organization we represent, we need to be cognizant of the different market segment we are targeting across these three that I mentioned. Because the way they approach investing will be very different, their needs will be very different, and we have to adapt ourselves to what they're looking for.
So what are those, what sort of approach do you take then with those three different categories in terms of the investment tools perhaps, or even the investment that these millennials themselves would be interested in?
Let's start with the third category, the millennials from the rich families. These millennials between the age of 20 and 35, very likely they're educated overseas, in US, in London, and they now come back to Asia with fresh thinking. They tend to be more open-minded than their parents or their grandparents. They tend to embrace technology. They rely less on face-to-face interaction with the bankers. They want technology to drive everything, all the way from accessing information online to placing trades online to checking the market. They want 24/7 access, right? So the private bankers need to adapt themselves to these changing expectations because these millennials are now coming of age and they are now getting involved in the family business, even the running of the family office. And in Asia today, family business and family office are quite intertwined. Okay, so for people who are targeting the rich families, they need to be cognizant of these millennials' expectations. The middle category, the mass affluent, the Citigold type of client, these millennials, they are usually very sophisticated in their investment style. They are quite happy to invest in complicated products, structured products, alternatives, hedge funds. So the pitch to them, it's slightly elevated. The last category, which is the retail market, those millennials that is just starting work, they are usually the target of insurance companies. Insurance agent will call them up and try to sell them life policies or investment-linked policies. So clearly you could see across these three categories, while they're all millennials, while they all have certain expectation of the use of technology, their mindset towards investing is quite different. And they also come from different backgrounds with different amount of investable assets at their disposal.
I just wanted to lastly focus in on that sort of high wealth millennial category, those who family office driven, because I understand that particularly within the Asian region, this rise of family offices is somewhat of a new trend. Can you expand on this a little bit for us?
Sure. So the concept of family office is extremely mature in other parts of the world, in the US and Europe, where family office has been around for more than 10 generations even. But here in Asia, most of the family office are probably just in the third generation, fourth. Very rarely you see fifth generation and above. Again, it's about the history of this part of the world. But it is growing and growing exponentially, and that is why we are seeing more and more family office being set up. As I mentioned earlier, family office and family business are quite intertwined here in Asia, because most of the wealth here in Asia today is originated from businesses. And many of these businesses are still very active. But these millennials are now coming of age to take over these family businesses, and some of them have chosen to let professionals run these businesses as they pursue other interests in life. So they take on a more governance role. So they relinquish control of the family business to the professional, but they still own the family business. So they will have holding companies, they will have family office, and we need to be more conscious of this new development to see how we can help these millennials be in better control.
Stephen Seow, many thanks for your insight.
Thank you. Thank you for your time.
That is all we've got time for right now. You've been watching us here at FundForum Asia 2016. Many thanks for your company. Goodbye.
Bye-bye.